The presidential election has without a doubt a huge impact on the stock market. This year is especially true because of the polar opposite stance that the candidates have on the stock market. If you know exactly how it can impact the stock market, you can position yourself accordingly to be profitable in your long-term investing. 2009 is a perfect example of that, which we will look into this video. We are proud to announce that this video is sponsored by eToro. You can click the link in the description below to access their website. eToro is the world's leading social trading platform. It's trusted by millions of users from over 140 countries. You can trade and invest stocks, commodities, cryptocurrencies with its simple, intuitive, easy to use platform, which are three qualities we love here at Game of Trades. Now let's get right into the video. We are first going to talk about how the presidential election can actually have an impact on the stock market, and we're then going to apply these concepts to the 2020 election that is going to be happening in November of 2020, right here, and how a Trump or Biden win could potentially impact the stock market. Now, the first main impact is fiscal policy. This can be in the form of tax cuts or government spending. The Trump rally here in 2016 and 2017 is a perfect example of that. Let's go to a weekly chart to see that in detail. The majority of people were not expecting a Trump win. So the stock market did not price in his tax cut policy before he was elected. And you can see as soon as the election occurred here, November 2016, the stock market started a heavy uptrend. The markets went from being in a sideways consolidation range throughout 2014 and 2015 to continuing the bull market that we saw from 2009 lows. This was a direct result of fiscal policy. When you make a tax cut, what you essentially do is increase the profit margin of the majority of the companies in the S&P 500. Considering the S&P 500 trades based off PE ratios, these stocks suddenly become undervalued, which attracts a lot of interest. This explains why stocks made a parabolic run throughout 2016 and 2017. The second fiscal policy is government spending. The government can either increase spending on financial assets or on non-financial assets. A perfect example of that was quantitative easing that started in 2008 under Obama, right here. Quantitative easing has a direct impact on the stock market and on the bond market. Government spending on non-financial assets will not make the stock market go up, or at least not nearly as much as what we are seeing with quantitative easing. So if I clear this chart to clean it up a little bit, you're starting to understand that this bull market was fueled by quantitative easing from 2009 to 2014, and then tax cuts from 2015 to 2018. If you're enjoying this video, make sure to hit the like button. These kinds of videos take a long time to prepare, so we really need to get to a larger audience in order to continue making these. Now, the second main impact that the presidential election can have on the stock market is uncertainty. 2014 to 2016 was a perfect example of that. People were not sure exactly what was going to happen. When you don't know what's going to be happening, you're not going to invest your money. As soon as the uncertainty clears away, the stock market picks a direction, whether that is up or down. The stock market is often much flatter in the years leading up to an election, with an average of 6% gains in the year leading up to the election versus an average of 8.5% any other year. So with this chart, you're starting to get an idea of what kind of an impact the presidential election can have on the stock market. So let's discuss the 2020 election with Trump versus Biden. Now, fast forward to November, we know Trump wants to push the stock market higher. This is one of his main selling points for his campaign. If he's elected, he will likely continue focusing on the government spending directed towards financial assets. This is what we saw with quantitative easing unlimited here. This is what's pushing the stock market much higher than what it's supposed to be in terms of valuation. Now, Biden, on the other hand, has two main policies that are going to impact the stock market. The first one is tax hikes. He wants to reverse the tax cuts that Trump implemented. So as we discussed here, a tax cut increases company profits, so a tax hike would lower their margin and make the stock market even more overvalued than it is. This would very likely put a cap on the potential growth for the stock market. The second main policy that Biden has in regards to the stock market is a coordination of fiscal and monetary policies. So what does this mean? In short, this means that he wants to redirect government spending to non-financial assets. He wants to focus the spending on the middle class and the lower class. Both of these policies will have a negative impact on the stock market, or at the very least hinder the potential growth to the upside. And this is actually one of his main selling points. I'm going to show you an article I found on CNBC. Biden calls for end of era of shareholder capitalism. If you go on to read further into the article, he describes he wants to focus more on families rather than the stock market, which has been the singular focus of President Donald Trump. The point of this video is not to take sides. It is to be able to understand accurately how we can position ourselves in our investing for the next presidential term. And I wanted to finish off the video with a very interesting thought. I'm going to clear this chart. It actually works both ways. The stock market has a huge impact on who will get elected. Some say that the stock market is the most accurate predictor of who will get elected. In the 3 months leading up to the election, the performance of the stock market determines who is elected. So a stock market rally that continues all the way till November in an exponential form would probably increase the odds of President Trump being re-elected. This makes complete sense considering the majority of Americans actually own stocks and are pleased when the value of their stocks goes up. So that's about all I wanted to cover in this video. I hope you guys enjoyed. Again, make sure to like the video to support this kind of content, which requires a little bit more preparation. In the meantime, good luck on your trading and see you next time.